Hello everyone, welcome to Otasuno's YouTube channel. I'm Francis Zhang, and I'll be your host today, and we will be diving into one of the most powerful wealth-building tools in history, the S&P 500. Here we'll explore how to invest in it intelligently, avoid common pitfalls, and even enhance returns using data-backed strategies. Whether you're a seasoned investor or just starting out, this presentation will give you actionable insights. Before we get into the how, let's talk about the why. The S&P 500 isn't just a random collection of stocks, it's the backbone of the US economy, representing 80% of the market's total value. Since 1926, it has delivered an average annual return of about 10%. That means if you had invested $10,000 in 1990, it would be worth over $200,000 today, without picking a single stock. But here's the catch: to truly benefit, we need to understand how it works, when to hold steady and when to adjust. Great investing starts with great education. Here are 3 must-read books. 1. The S&P 500 Guidebook. Think of it as the owner's manual for the index. A Random Walk Down Wall Street. This book proves that most active traders underperform the index over time. The Intelligent Investor. Warren Buffett's Bible teaches us how to think about risk and opportunity. These aren't just theory. They're the foundation of every successful long-term strategy. Now let's talk about upgrading your returns. Modern research shows that tilting your portfolio toward factors like value, momentum, or quality can boost performance. For example, a simple strategy of overweighting low PE stocks within the S&P 500 has historically added 2 to 3% per year. Books like Active Portfolio Management and Factor-Based Investing give us the blueprints. The key takeaway? The S&P 500 isn't just a buy-and-forget tool. It's a platform we can optimize. But here's where most investors fail. They let emotions drive decisions. Robert Shiller's research shows that the S&P 500's price swings are often driven by irrational exuberance or panic, not just fundamentals. Right now, the Shiller PE ratio is around 30, which historically means lower future returns. That doesn't mean sell everything, but it does mean being cautious. Howard Marks puts it best: the cycle will always prevail. Our job is to recognize where we are in it. How many of you check valuation metrics like the Shiller PE before investing? Now, let's talk about protection. The S&P 500 isn't risk-free. It dropped 34% in 2020 and 50% in 2008. Nassim Taleb's Black Swan teaches us that rare, extreme events happen more often than we think. So what can you do? Allocate 5% to gold, GLD, as a crisis hedge. Consider VIX futures or put options during high-risk periods. These aren't for daily trading, they're insurance policies. The S&P 500 is evolving. High-frequency trading now drives 60% of volume, and ESG rules are reshaping which companies get included. Books like The Age of Algorithms help us anticipate these shifts. The takeaway? The index you invest in today won't be the same in 10 years. Stay informed.
So what should you actually do? Here's your playbook. 1. Core, 80%. Invest in low-cost ETFs like SPY or IVV. 2. Satellite, 20%. Add sector ETFs example. Tech with XLK for targeted growth. 3. Rebalance quarterly. If a sector grows beyond 5% of your target, trim it back. 4. Hedge when valuations are stretched, like today. This isn't complicated, but it requires discipline. To execute this well, arm yourself with the right tools. Bloomberg Terminal for real-time data, if you have access. S&P's Data Atlas for deep research. Advances in financial ML if you want to test advanced strategies. Knowledge is power, but only if you use it. To wrap up, remember: 1. The S&P 500 is a proven wealth builder, but it's not set and forget. 2. Behavioral discipline and hedging are just as important as picking assets. 3. The future index will look different. Stay adaptable. Now, I'd love to hear your thoughts. What's your biggest challenge with S&P 500 investing? Or if you're curious about a specific topic, factor investing, hedging techniques, or ESG trends, let's discuss. Thanks for listening. If you have any questions or ideas, please feel free to discuss. If you find the content fascinating, please like and subscribe to the channel. I value your support. Thank you very much. Subscribing to the Otasuno's YouTube channel will keep you up to date with the latest videos that caters to your tastes. See you again.